This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
U.S. crude oil and fuel stockpiles rose last week, bolstered by another big release from strategic reserves, while demand slackened, the Energy Information Administration said on Wednesday. Crude inventories rose by 3.3 million barrels in the week to July 8 to 423.8 million barrels, compared with analysts' expectations in a Reuters poll for a 154,000-barrel drop. Stocks in the Strategic Petroleum Reserve fell nearly 7 million barrels to their lowest since August 1985. Refinery crude runs rose by 202,000 barrels per day in the last week, boosting utilization rates by 0.4 percentage point to 94.9%. U.S. Gulf Coast utilization rates rose to 98.1% as facilities there have been running full tilt to satiate strong demand and for overseas exports.
China's daily crude oil imports in June sank to their lowest since July 2018, as refiners anticipated COVID-19 lockdown measures would curb demand, data showed on Wednesday. The world's top crude buyer imported 35.82 million tons last month, data from the General Administration of Customs showed, equivalent to 8.72 million barrels per day, BPD. That's 11% lower than a year ago and 19% below the 10.8 million barrels of oil per day level in May.
Moving on to the top news in the energy sector.
The global oil market is walking a tightrope between scarce supply and the possibility of a recession, the International Energy Agency, IEA, said on Wednesday, with higher prices and worsening economic conditions already taking a toll on demand. The cloudy outlook is reflected in volatile trading, with Brent crude falling 7% to below $100 a barrel on Tuesday as futures traders worried over an economic contraction, but high physical oil prices still indicate strong demand for now. Rarely has the outlook for oil markets been more uncertain. A worsening macroeconomic outlook and fears of recession are weighing on market sentiment, while there are ongoing risks on the supply side, the Paris-based agency said.
Brazil is looking to buy as much diesel as it can from Russia, and some of the deals were being closed. As recently as yesterday, Brazilian Foreign Minister Carlos França said on Tuesday, without giving further details on the transactions. We have to make sure that we have enough diesel to the Brazilian agribusiness and, of course, for Brazilian drivers, França told reporters during a visit to the United Nations in New York. So that's why we were looking for safe and very reliable suppliers of diesel. Russia is one of them. Brazil is looking to buy, as much as we can, from Russia, he said. Next, we have the top news in metal markets. China's June copper imports rose 15.5% from a month ago to 537,698 tons. Customs data showed on Wednesday, after demand picked up following the lifting of COVID-19 lockdowns that had hurt manufacturing activity. The official Manufacturing Purchasing Managers Index, PMI, rose to 50.2 in June from 49.6 in May, the first time it rose above the 50-point mark that separates contraction from growth since February. Resumed factory production bolstered copper demand, while trade flows that had been hampered by epidemic-related logistics issues also became smoother, said He Tianyu, Crew Group's China copper demand analyst.
China's Tianqi Lithium shares recovered to close their first session on the Hong Kong Stock Exchange unchanged, after sinking more than 11% in the city's biggest listing so far this year. The lackluster start was expected to further depress sentiment for similar equity sales in the second half of 2022 for Hong Kong. The city has seen share sales plunge by as much as 90% this year, with global financial markets roiled by geopolitical tensions and rising interest rates. Shares in Tianqi, one of the world's top producers of lithium chemicals for electric vehicle batteries, fell to as low as 72 Hong Kong dollars and 65 cents compared with their final sale price of 82 Hong Kong dollars.
We will now look at the top news in the agricultural sector.
Russian, Ukrainian and Turkish military delegations met with UN officials in Istanbul on Wednesday for talks on resuming exports of Ukrainian grain from the major Black Sea port of Odessa as a global food crisis worsens. Turkey has been working with the United Nations to broker a deal after Russia's February 24 invasion of Ukraine sent prices soaring for grains, cooking oils, fuel and fertilizer. Turkish Defense Minister Hulusi Akar announced the latest talks on Tuesday. The Interfax news agency quoted the spokesperson for Russia's defense ministry as saying that Moscow had presented a package of proposals for a speedy practical resolution of this issue during Wednesday's meeting.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.